Welcome back to TechEyeSpy, where we look past the hype and into the machinery that actually builds the future. Today's episode is about a space company that rarely makes the headlines, yet quietly touches more missions than most people realize. This is not a launch provider. It is not a tourism play. It is not selling dreams of Mars villas. This is about infrastructure, manufacturing, and the industrial backbone of the modern space economy. Today we are looking at Redwire Corporation, listed on the New York Stock Exchange under the ticker RDW. Redwire is one of those companies that only makes sense once you stop thinking about space as an event and start thinking about it as a place. A place where hardware has to unfold, power itself, orient correctly, survive radiation, survive temperature extremes, and work flawlessly for years without maintenance. Someone has to build that hardware. Someone has to integrate it. Someone has to make sure it actually functions once it is no longer reachable. That is where Redwire lives. Redwire was formed in 2020 by consolidating several heritage space companies under one roof. That matters because while the corporate entity is young, the technology is not. Redwire hardware has flown on hundreds of missions. Its systems have been to low Earth orbit, deep space, and planetary environments. This is a company with real flight heritage, not a slide deck. What makes Redwire particularly interesting right now is timing. Space is shifting away from one-off exploration missions toward persistence, persistent Earth observation, persistent national security presence, persistent research, persistent manufacturing. That shift quietly favors companies that specialize in infrastructure rather than spectacle. Redwire operates in three overlapping worlds: civil space, supporting agencies like NASA; national security space, supplying mission-critical hardware to defense customers; and commercial space, enabling private companies that are building stations, satellites, and future orbital platforms. It also operates something few space companies do at scale: active in space manufacturing and research, including microgravity facilities aboard the International Space Station. This is not science fiction. These are operational systems producing data today, laying groundwork for an orbital economy that goes far beyond communications satellites. For investors, Redwire sits in an uncomfortable but interesting position. It came public through a SPAC during the peak of space enthusiasm, and, like many companies from that era, expectations initially ran ahead of execution. Since then, the story has become less exciting on social media and more serious in boardrooms. Cost control, contract delivery, margin discipline, backlog quality. This is now an execution story. That makes Redwire worth revisiting. In this episode, we are going to walk through Redwire properly. We will look at what the company actually does, where its strengths are real and structural, where the weaknesses and risks still sit, and why opportunities in space infrastructure may favor companies like this over flashier names. We will also be honest about the threats, because space is not forgiving, and capital markets are even less so. As always, this analysis is part of the wider TechEyeSpy universe. If you want deeper, long-form thinking on space, infrastructure, and frontier technology investing, our books published by Rhubarb Bridge Publishing are available on Amazon and all good bookshops. They are designed to sit alongside these episodes, not replace them. Strengths. Redwire's first and most important strength is heritage disguised as youth. On paper, this is a company founded in 2020. In reality, it is a collection of businesses with decades of flight history folded into a single operating structure. That matters in space. Hardware does not get selected because it looks innovative. It gets selected because it has flown before, survived before, and failed less often than the alternative. Redwire enters bids with credibility that many newer space firms simply do not have. That heritage feeds directly into the second strength, deep integration into mission-critical systems. Redwire does not sell optional upgrades. It sells components that missions are built around. Deployable solar arrays, structural booms, avionics, navigation sensors, star trackers, and power management systems are not add-ons. If they fail, missions fail. This creates a level of stickiness with customers that is very hard to dislodge once trust is established. A third strength is diversification within space itself. Redwire is not dependent on a single customer, orbit, or mission type. Its revenue exposure spans civil space, national security, and commercial programs. NASA, the US, Department of Defense, and allied agencies sit alongside private space station developers and satellite operators. When one segment slows, another often accelerates. That internal balance is rare in a sector where many companies are effectively single-bet plays. Another underappreciated strength is active participation in space manufacturing and research, not just theory. Redwire operates real microgravity facilities aboard the International Space Station today. These platforms support pharmaceutical research, advanced materials, and biological experiments that cannot be replicated on Earth. This gives Redwire operational knowledge of orbital manufacturing that most companies only talk about in future tense. If space-based manufacturing becomes economically meaningful, Redwire is already inside the laboratory. Redwire also benefits from a picks and shovels business model. It does not need to win the launch race. It does not need to own constellations. It benefits when others spend more on space, regardless of who wins the headlines. Every satellite deployed, every station module launched, every defense payload upgraded increases demand for the kind of hardware Redwire provides. This makes the company structurally leveraged to the growth of the entire sector, not a single narrative. There is also strength in acquisition-led scaling. Redwire has shown it can integrate specialist firms and preserve their technical cultures while centralizing finance, sales, and program management. In an industry full of brilliant engineers and weak operators, this matters. Space companies often fail not because the technology does not work, but because the organization cannot scale responsibly. Redwire's model is built around absorbing proven teams rather than inventing everything internally. Finally, there is the strength of alignment with long-term government priorities. Space is no longer just exploration. It is surveillance, communications, navigation, resilience, and deterrence. Governments want redundancy, domestic supply chains, and trusted vendors. Redwire fits neatly into that requirement set. It is not flashy, but it is dependable. And dependability is exactly what defense and civil agencies pay for. Taken together, these strengths position Redwire as something closer to an industrial supplier than a speculative space startup. That does not make it exciting in the short term, but it does make it relevant as space activity matures. Next, we need to be honest about where this model strains, where the risks sit, and why the market still hesitates. Weaknesses. Redwire's most obvious weakness is financial strain during transition. The company came public during the SPAC era, when growth projections across space were optimistic and capital was cheap. Reality has since intervened. Redwire has had to pivot from growth storytelling to operational execution while under the scrutiny of public markets. That transition is difficult, and it has shown up in inconsistent profitability, pressure on margins, and a share price that still reflects investor caution. A second weakness is margin sensitivity tied to government contracts. While government customers provide stability and credibility, they also come with fixed pricing, long procurement cycles, and limited upside once contracts are signed. Cost overruns are often absorbed by the supplier, not the customer. This puts pressure on operational discipline and makes scaling margins slower than in purely commercial businesses. There is also complexity risk from acquisition-driven growth. Redwire's strength in consolidation carries a parallel risk. Integrating multiple specialist firms into a coherent operating model is hard. Cultural differences, duplicated processes, and uneven project management standards can quietly erode efficiency. If integration slips, the company risks becoming a loose federation rather than a unified platform. Another weakness is limited public visibility and narrative clarity. Redwire does not fit neatly into popular space investment themes. It is not launch. It is not tourism. It is not AI-driven imagery or consumer-facing technology. This makes it harder to tell a simple story to generalist investors. In markets driven by attention, quiet infrastructure companies are often mispriced for long periods, sometimes fairly, sometimes not. Redwire also faces capital intensity without immediate reward. Space hardware requires long development cycles, rigorous testing, and certification. Cash goes out years before revenue comes in. This stretches balance sheets and limits flexibility, especially when interest rates rise and investor patience falls. Unlike software, there are no shortcuts. There is also customer concentration risk, particularly around US government agencies. While diversified within space, Redwire remains heavily exposed to a small number of large institutional buyers. Budget delays, political shifts, or program cancellations can ripple through revenue unexpectedly, even when long-term demand remains intact. Finally, there is the weakness of being early to markets that are not yet proven. In space manufacturing and microgravity research, Redwire is ahead of demand, not chasing it. That is strategically strong, but financially uncomfortable. These activities generate insight and positioning more than near-term cash. If commercial space stations or orbital factories are delayed, returns on this investment take longer to materialize. None of these weaknesses are fatal, but together they explain why Redwire has not enjoyed the valuation multiple some space investors once expected. This is not a story of broken technology. It is a story of timing, execution, and capital discipline under pressure. With that laid out, the next question becomes whether the future environment rewards this kind of company more than it has in the past. Opportunities. Redwire's biggest opportunity lies in the industrialization of space. The sector is moving beyond exploration and novelty toward permanence. More satellites, more redundancy, more servicing. More platforms that are expected to stay operational for years rather than months. Every one of those trends increases demand for reliable, flight-proven infrastructure. This directly favors companies like Redwire that specialize in hardware that stays alive in orbit rather than simply getting there. A second major opportunity is the emergence of commercial space stations. As the International Space Station approaches the end of its operational life, multiple private successors are being planned. These stations will require power systems, structural components, research modules, and deployable infrastructure. Redwire already operates manufacturing and research facilities in microgravity today. That experience positions it as a natural supplier and potentially an operator in the next generation of orbital platforms. There is also significant opportunity in national security space expansion. Space is now a contested domain. Governments are investing heavily in resilient satellite architectures, rapid replacement capability, and diversified suppliers. Redwire's hardware plays directly into this shift. As defense customers prioritize trusted vendors with domestic manufacturing and proven reliability, Redwire's profile improves rather than fades. Another opportunity sits in on-orbit servicing, assembly, and manufacturing. The future of space is unlikely to be purely launch and forget. Satellites will be upgraded, repaired, refueled, and assembled in space. Deployable structures, modular components, and adaptable systems become essential. Redwire's focus on deployables and in-space operations aligns closely with this evolution. Redwire also has room to grow through continued disciplined consolidation. The space industry remains fragmented, filled with specialist suppliers that lack scale, capital, or access to public markets. Redwire can continue to act as a platform that absorbs these firms, expands its catalog, and increases its relevance across more mission profiles. Done carefully, this can increase both revenue and strategic importance without reinventing the wheel. There is an additional opportunity in non-space adjacent markets. Many of Redwire's technologies, particularly in sensors, materials, and advanced manufacturing, have applications in defense, aerospace, and industrial systems on Earth. Leveraging space-hardened technology for terrestrial use can open incremental revenue streams without starting from zero. Finally, there is the opportunity of valuation reset. Redwire is no longer priced as a speculative space dream. It is increasingly being valued as an industrial supplier. If execution stabilizes, margins improve, and backlog quality becomes more visible, the market can re-rate the company quietly but meaningfully. This is not a viral upside story. It is a compounding one. These opportunities hinge on patience, execution, and a belief that space becomes boring in the best possible way. Boring infrastructure, boring reliability, boring recurrence. But none of that happens without risk, and space remains unforgiving. Threats? Redwire's most persistent threat is execution risk under public market pressure. Space hardware development is slow, expensive, and intolerant of shortcuts. Public markets, by contrast, demand visible progress, predictable margins, and clear guidance. That mismatch creates constant tension. A single delayed program, cost overrun, or missed milestone can weigh heavily on investor confidence even if the long-term strategy remains sound. Another major threat is government budget volatility. While civil and defense space spending is structurally rising, it is not smooth. Budgets are political. Programs are delayed, rescoped, or cancelled entirely. Redwire's exposure to large institutional customers means it can feel the impact of decisions made far above the technical level. Even well-executed programs can be paused for reasons unrelated to performance. There is also the threat of pricing pressure from vertical integration. Large primes and newer launch providers increasingly want to build more systems in-house to control cost and scheduling. If major customers decide to internalize components that Redwire currently supplies, pricing power weakens. Redwire must constantly justify why buying from a specialist remains better than building internally. Competitive pressure is another threat. particularly from international suppliers. Space is a global industry, and while national security programs favor domestic vendors, commercial missions often do not. Lower-cost suppliers from Europe or Asia can undercut pricing, especially in commoditized components. Redwire's defense here is reliability and heritage, but cost pressure never disappears. A less visible but serious threat is supply chain fragility. Space hardware relies on specialized materials, precision manufacturing, and long lead time components. Disruptions, whether geopolitical, industrial, or logistical, can cascade into delays and cost increases. In an industry with little tolerance for failure, even small disruptions can have outsized impact. There is also the strategic threat of being early to markets that develop slowly. Commercial space stations, orbital manufacturing, and on-orbit servicing are compelling visions, but timelines are uncertain. If these markets take longer to mature than expected, Redwire must sustain investment without near-term payoff. That strains capital and tests investor patience. Finally, there is the broader threat of sector sentiment. Space investing moves in cycles. When enthusiasm fades, even strong companies struggle for attention and capital. Redwire's low visibility profile makes it especially vulnerable to being ignored during downturns, regardless of operational progress. These threats do not negate the opportunity. They define the terrain Redwire operates on. This is not a forgiving environment, and survival alone filters out weaker players. All that remains now is to step back and assess what Redwire really represents in the space economy. Redwire is not a company built to inspire awe. It is built to endure. In a sector still dominated by spectacle, Redwire occupies the less glamorous but more durable layer of the space economy. It builds the systems that deploy, power, stabilize, and sustain missions once the cameras are gone. That positioning will never trend on social media, but it is exactly the kind of work that becomes indispensable as space activity shifts from exploration to permanence. The company's story is not about whether space will happen. That question is already answered. Satellites are multiplying, defense reliance is increasing, scientific research in orbit is expanding. The real question is who quietly supplies the infrastructure that makes all of that function reliably over decades rather than headlines. Redwire's strengths lie in heritage, integration, and relevance. Its weaknesses sit in capital intensity, public market pressure, and the slow grind of execution. Its opportunities grow as space becomes boring, regulated, and industrial. Its threats reflect the harsh reality of operating in one of the most unforgiving engineering environments humanity has ever attempted to commercialize. For investors, Redwire is not a moonshot. It is a patience test. This is the kind of company that benefits from more launches without needing to launch anything itself. It benefits from more satellites without needing to own them. It benefits from more stations, more redundancy, and more geopolitical seriousness in orbit. If space becomes a real economic domain rather than a novelty, companies like Redwire become harder to replace, not easier. That does not guarantee success. Execution still matters. Balance sheets still matter. Timing still matters. But Redwire's role in the ecosystem is clear, and clarity is rare in emerging sectors. If you are looking for fireworks, this is not the stock. If you are looking for infrastructure, discipline, and long-term positioning in space, Redwire deserves attention. As always, this has been TechEyeSpy. If you want deeper dives into space, frontier technology, and infrastructure investing. Our books, published by Rhubarb Bridge Publishing, are available on Amazon and all good bookshops. Thank you for listening.